Good afternoon, everyone. Thank you for joining us today. Please allow us 1 minute until everybody joins us. Thank you. Good afternoon, ladies and gentlemen. Welcome to our market sounding presentation. I would like to thank you all for attending our new car parking project market sounding. My name is Hanan Al-Medfay, and I am acting head of transactions at the Abu Dhabi Investment Office. Today we will take you through our new car parking project market sounding session. And again, we'd like to thank you all, and we're very happy to have you all in our session today. If we can move to the next slide, please. To start off with, I would like to share with you our agenda for today. We will start by giving an introduction to Abu Dhabi Investment Office as a whole. And from there, we will talk you through the infrastructure partnership framework. Then I will hand the floor to my colleague, Sarah, to introduce the new car parking project. And finally, we'll be looking forward to hear your feedback, as we will be sharing a link in our chat box where we'll be very eager to hear your feedback on this session that we have together. If we move on. So to start off with, I would like to tell you that the Abu Dhabi government has established Abu Dhabi Investment Office through Law Number 1 of 2019. The purpose of this is to enhance the investor and the investment ecosystem, as well as supporting the FDI and the DDI in the Emirate. Also, Abu Dhabi Investment Office facilitates the public-private partnership between the government sector and the private sector. And in order to do this, the Abu Dhabi government has introduced Law Number 2 of 2019, which regulates the public-private partnership. Since the establishment of the PPP law, Abu Dhabi Investment Office introduced the regulations and guidebooks, and this is all to create a transparent and sustainable environment for all PPP projects. We will be talking more about that in the next slides to come. If we move to our next slide, we'd like you to know that Abu Dhabi Investments Office main goal is to support the private sector investment in Abu Dhabi. And this is done through promoting Abu Dhabi as a preferred investment destination, attracting innovation-focused companies to Abu Dhabi and creating investment opportunities, and facilitating thriving and sustainable business environment and a robust public-private partnership model. If we move to the next slide, we would like to share with you the key pillars of the Abu Dhabi Investment Office, and those are the investor care service, and this supports the investor journey from startup all the way to operation, the incentive instruments, which provides financial and non-financial incentives to support market success, and the infrastructure partnership. And here is where the PPP unit falls. The team here is responsible for the origination, structuring, and procurement of projects within the Abu Dhabi government. If we move to the next slide, we will demonstrate how the Abu Dhabi Investment Office facilitates transparent, long-term arrangements between the private sector and the government partners. And this is to demonstrate that the main task of Abu Dhabi Investment Office infrastructure partnership is to identify PPP opportunities, structure transactions and build business case, manage the tendering process end-to-end, lead negotiations all the way to financial close, and support transition to the contract management phase. The purpose of procuring projects through PPP framework is to give access to capital infrastructure projects to the private sector. This all leads to a long-term partnership between the private sector and the government sector. And during this long-term relation, knowledge is exchanged and efficiencies and innovations are developed to the project and brought in. And most importantly, we provide value for money to the government. If we move to the next slide, we would like to emphasize that we have developed a robust governance structure where we have a stage-gated approval process, which is consistent with global best practices. At ADIO, we start the projects at the origination phase. And here in this phase, we work closely with the different government entities and we identify and understand their needs. We then run a high-level pre-feasibility study and we use our selection criteria to assess whether the project that is being brought forward is feasible and would pass as a PPP project. In case the project passes as a PPP project, potential project that is, we move to the second stage. The second stage is the structuring and the due diligence. In this stage, we start by bringing the different advisors on board. We start building the business case. We conduct the value for money analysis, and we conduct the market sounding, just like what we are doing today. And this is important because we have to understand the market's interest and what it is the investor is looking for in our project and to structure the deal in the most attractive way. Once that is done, and all the data that we need is in place, we move to the third phase, which is the tendering process. And in this phase, we receive the bids, we issue the RFP, RFQ, and we assign the preferred bidder. From there, we move to the fourth stage, which is post the financial closure, and this would be the contract management phase. Now, all the information which I have presented and which we have discussed and more details can all be found in our guidebook. And our guidebook is a public document which is found online, along with other documents which you will find very helpful and can be informative to understand more about us. If you have, please feel free to visit our website and go through these documents. And if you have any questions, we're more than happy to address them and to talk further in a different session or on one-on-one sessions. Now I will be giving the floor to my colleague, Sarah, and she will be giving you more insights on the new car parking project.
Thank you, Hanan, for the comprehensive introduction on ADIO's partnership framework. Good afternoon, everyone. Thank you for joining us today and welcome to the market sounding webinar of our upcoming new car parking project. First, I would just like to introduce myself. My name is Saria Kvidis. I am the lead transactor of the new car parking project here at ADIO. So today I will be presenting the market sounding along with our transaction management team. And this includes our external advisors from Allen Overy, which is represented by Elliot Sofford, and Mott MacDonald, represented by Jonathan Looker. So the three of us will be walking you through the agenda for today. And at the end of this webinar, we will be asking you to complete a questionnaire that will help us in soliciting your feedback on the upcoming deal. The survey link will be available in the chat box, as well as in the thank you email that we will send you after this webinar. So the objective of the event today is to better understand the market interest in bidding for this project and to construct this deal in a way that will be mutually equitable to all parties. So in order to do that, and in accordance with our guidebook, which, as Hanan mentioned, is a public document that you can find on our website, we are in the process of now finalizing the business case related to the project and have now proceeded to approval stage to proceed to tender launch. For that, we are required to undertake a structured market sounding. So to give you a full understanding of our upcoming project, we will be introducing the project scope and objectives. the project structure, which includes details on the contractual framework, risk allocation, and payment mechanism. And then we will be outlining how the tender process works, and we will discuss the procurement timeline. Finally, and most importantly, after walking you through this presentation, we would greatly appreciate your feedback on specific aspects of the project. Your feedback is very valuable and important to us, as it will help us, as I mentioned before, shape this deal in a way which we believe would be most attractive to the market. So let's just first focus on the project rationale and the key objectives of the new car parking project. I will hand over to our technical advisor now from Mott MacDonald, Jonathan Looker, to take you through these in detail.
Thank you, Sarah, and good afternoon, everybody. So the project that we're presenting today has gone through, as Sarah and Hanan have outlined, a series of studies, and we've got to a point where we're now in the process of finalising the business case. Now, those studies that we've undertaken in conjunction between Mott MacDonald, ADIO, and also Department of Municipalities and Transportation are looking at really what is the demand drivers that are backing up the need for this project. So I'll come on to some more details on the project shortly, but essentially we're in a scenario in downtown Abu Dhabi where we have a shortfall of parking, and that's a consistent problem across the city. So we have undertaken a survey of residents and people parking within predominantly the tourist club area, and it's very evident that there are significant peaks in parking demand which currently are not met by the provision that's currently in the tourist club. So that really drives us forward into people who are spending significant amounts of time searching for a parking space, which is not acceptable to the government of Abu Dhabi and can be resolved and solved by the provision of additional parking. So in the round, we've identified clearly that there's a need, and therefore we have to identify how we can meet that need through the supply that can be presented. We've undertaken a series of surveys and investigations into available sites, and that concluded that there are 12 sites available to us for delivery of additional parking spaces on the island. As you can see on the table in front of you, from those 12 sites, the analysis that was undertaken is that there's over 5,000 spaces for demand, and therefore unmet demand by the existing provision. And we therefore looking to provide new spaces of 4,860 spaces. However, you'll notice that, and then you'll see more detail shortly, that a number of the sites that are selected actually have existing on-street, at-grade parking. So in the provision of the new multi-storey car parks, we're actually going to be removing some existing ground parking. Therefore, the net supply that we're providing is just shy of 4,000 spaces, and is 74% of the demand. So we're very confident that the provision of the parking and the multi-storey car parking as part of this project will not only help to meet the unmet demand, but actually will also be utilised significantly by the public. So I'll just pass now back to Sarah to carry on with the overview of the project structure.
Thank you, Jonathan. So now I would just like to draw your attention to the project overview and structure. As Jonathan mentioned, the project aims to resolve a severe parking shortage in Abu Dhabi Island. Therefore, the project will involve the design, build, finance, and maintenance of 4,860 parking spaces across 12 facilities in Abu Dhabi. The concession period will be 23 years. This includes 3 years for construction and then 20 years for operation. And the concession period will expire simultaneously for all 12 car parks and won't expire on a phased basis. In addition, to ensure minimal disruption of livability in the community and to to provide continuity of the existing parking provisions, the project will include a phased delivery of the 12 sites. So phase 1 will include the construction of 6 facilities, which will provide 3,280 spaces. And then phase 2 will include the remaining 6 facilities, providing 1,580 spaces. So now Elliot Sofford, our legal advisor from Allen Overy, will take you through the project and transaction structure.
Thanks very much, Sarah, and good afternoon to everyone on the line. Thanks very much for joining us. So I think as Hanan and Sarah have both explained already, this program of projects to be undertaken on a PPP basis, so a public-private partnership basis. And I from looking at the list of participants, I can see that there's a number, a good number that will be very familiar with how that kind of transaction framework is formulated, but perhaps there are others that are less familiar with that as a structure and are more used to works and services being procured on a direct basis, where you have a construction contract and then separately a services contract. So what happens in a PPP and what will happen in this deal, as is sort of shown in the structure diagram to the right of the slide, is that all of the works and services will simultaneously be procured under a single sort of head agreement between the government and the private sector, shown in the diagram as the project company, and that is the partnership agreement. So all of the obligations relating to the 23 years of the project, including construction, completion, and then into the operation phase, will be captured within that partnership agreement. What the structure diagram shows, and we'll come on to some of the deal terms in a little bit more detail in subsequent slides, but the transaction structure diagram shows an expectation that this project will be organised on a project finance basis. As I'll mention in the next slide, the payment arrangements under the partnership agreement, unlike a traditional construction contract, the way the PPP structure works is the payments don't start being made until the assets are complete, so until the car parks are built. So through that first 3 years of construction, that construction cost will be met by the private sector, bringing a combination of its own equity finance, but also we expect, and there's a possibility that it may not be the case, and we'd be open to looking at alternatives if it suits people better not to work on a project finance basis, but there's an expectation that third-party lenders will also provide debt to the project. And so that is the reason for the establishment of the project company. The project company then acts as borrower to its lenders under its financing agreements, and the sponsor consortium, whether it's one or more entities, will hold the shares in that project company, and if it's a multiple of entities, you will have a shareholders agreement between those different parties. Then what typically happens is that the project company will subcontract the obligations under the partnership agreement for the construction phase, a building contractor, and during the operation phase, a maintenance contractor, and they'll be responsible for the actual performance of the works and the actual performance of the services. One other point just to call out on this slide is the parking revenue sort of stream, which is identified towards the top. The collection of parking revenues will not be something that we anticipate being within the scope of the project. We would expect that to continue to be done by Mawaqif, as would be the case today. So the responsibilities of the private sector under the partnership agreement are to build the 12 car parks and to operate them, but operate them in the sense of the maintenance that is required, as opposed to operate them in terms of collecting parking revenue and issuing fines and the like. I think we can probably skip on to the next slide. Thanks, Sarah. Yeah, so I touched on there the payment structure. So I think critically, and this is your sort of ordinary project finance type arrangement, the payment flow under the partnership agreement starts at the point of completion. So those monthly payments will be sufficiently sized so as to cover the ongoing maintenance cost, but also to repay the debt that was taken out for the purposes of building the car parks, and then also obviously to provide a return to the sponsors, to you guys as equity investors in the project. So that monthly payment is a lump sum that is fixed at the point in time we agree and sign the partnership agreement, so prior to the construction starting. And then on a monthly basis, that's paid subject to certain adjustments. And those adjustments are made based on the availability of the car parks. So there will be deductions to the extent certain parts of the car parks or parking spaces are not made available as a result of the maintenance works not having been done properly, or the car parks not having been kept in a manner that's consistent with the requirements that will be set out in the partnership agreement. And then additional service requirements, to the extent they're not achieved, then there is potential for effectively a KPI regime around that. And then the other sort of factors that will impact on payment linked to, there will be certain reporting requirements. To the extent that's not done, then there are the KPIs that relate to that. And then really there'll be an adjustment to the extent necessary for increase in utilities consumed by the car parks, which obviously will be relatively limited given the nature of the assets, and then also an adjustment for indexation on the local portion of that payment. Perhaps the only other point on this slide just to mention is the third-party revenue opportunities. I think we anticipate there being the opportunity to use the car parks for generating additional revenue, so outside of just the parking payment that's collected, in terms of sort of small kiosks or advertising space. We're still working through exactly what we think that looks like, and there's a good chance that we'll ask for, in fact, as part of this market sounding, we'll ask for some feedback on exactly what you believe that could entail. And then the idea is that will be built into the project in order to effectively provide some additional upside for you as the private sector. I think we can skip on, Sarah. I pass back to Jonathan for a bit more on the sort of technical details.
Thanks, Elliot. Yeah, so I mean, you'll be able to see there the 12 locations. As I mentioned previously, the tourist club area is the predominant location for these car parking facilities. Within the 12 sites, we actually have two types of site. One is very much a larger site, which has significant space for the development of the car parking facility. They've actually got fairly easy access circulation routes and are next to or adjacent to open areas. On the flip side, for everyone that knows the tourist club area, it's very residential. It can be quite congested. And as such, the majority of the sites are a little bit more constrained in terms of their size, and therefore will be a little bit trickier with respect to construction activity. However, we have undertaken an exercise to make sure and establish that the sites that are available and that we're making available can actually facilitate the construction of these car parks. So that exercise has been done, and we're confident that it's achievable. But obviously, as part of your ongoing due diligence into the project, we will work with you to ensure that. Each of those car parking facilities has two sets of scope, as Elliot's kind of outlined in the payment mechanism. We've got the requirement for you to build the facility itself, and there will be within the project documents a significant outlaying of and description of what that facility scope should look like. But in summary, on the slide here, we're looking for a multi-storey car park, which is above ground. That's the base principle. And then there'll be relevant additional sort of facilities put within that. So we're looking for electrical vehicle charging points, which is fairly standard. There will be need for special needs and people with determination access to the car parks, and all of the sort of fairly typical services requirements that are in there for CCTV and security and the building services, etc. Once the assets are constructed and they're handed over for operation, the responsibility of the project company very much goes into maintaining the integrity of those assets. So there is the building and life cycle maintenance, the regular cyclical maintenance that you're going to have to do, but we're also obviously looking to have a clean and an asset that's free from say pests, etc. So the utilities, cleaning, waste management, pest control, that all will become your responsibility as the project company. Safety and security is paramount, as always in the car parking facility, and that responsibility is also being passed through to the project company. Fairly typical for service scope, and something I'm sure you're all very familiar with. With respect to the phasing that was talked about before, we are splitting the construction phasing into two. That, as Sarah mentioned, was very much to ensure that we're maintaining on-street parking throughout the delivery of the project. Taking them all out in one go is not sustainable and only will exacerbate the problem that's currently there. So the phasing is split into two, but we are looking to try and maximise the number of spaces we can provide in that first phase. And we can obviously talk through in more detail when information becomes more available as the project progresses. So I'll hand back to Elliot, which I think is going to just run through a bit more of the specifics around the deal terms.
Thanks, John. Sorry, we skipped to the, yeah, that's brilliant. Thank you. Okay, so I guess quickly just to run through the terms of the deal as we see them today. And again, we're asking for, just to sort of re-emphasize the point, we're asking for the purpose of this session is to gather feedback on these terms and on the scope and various arrangements that we've outlined so far and will continue to outline. So there are various questions relating to different parts of this in the feedback questionnaire that's been provided. So this talks that the parties to the partnership agreement that I was talking about earlier on will be, on one hand, project company formed by the successful bidder, and then from the government side will be the Department of Municipalities and Transport, will be DMT. An important point on that is that by having DMT sign the partnership agreement, you have a counterparty that is part of the Abu Dhabi government. So from a credit analysis, you can look directly to the Abu Dhabi government as standing behind the obligations of the authority under that document. So in the event that there was cause for a claim, for example, you would be claiming against the Abu Dhabi government. So from a credit perspective, it's an extremely strong counterparty, which when you're having your discussions with lenders, and we've simultaneously been running a number of similar market sounding exercises with the banks that are active in the region. The fact that it's the Abu Dhabi government that signs the partnership agreement is something that is extremely helpful in terms of how this project is being structured. As Sarah touched on, it will be a 20-year operations period, so there's 20 years of payments. That's exclusive of the first 3 years construction period. As discussed, the scope is 2 phases of 12 multi-storey car parks, 6 in each phase. ADIO's role in the process that was excellently summarised by Hanan at the outset is really to prepare and establish the business case, to work with the different stakeholders to establish and stress test the need, and then to run the tender process. So this market sounding exercise really being the start of that tender process. In terms of evaluation, and we'll touch on this a little bit more in later slides, but the bid evaluation, there'll be 2 stages. There's an RFQ stage, as a preliminary qualification, and then a more detailed RFP stage. And in each case, there'll be legal, technical, and financial requirements and evaluation process that will be gone through. Obviously, a key part of the financial evaluation is going to be the size of that availability payment that that is proposed. In terms of financing, the expectation is that the project will be supported by third-party debt on a project finance basis, and as part of the bid submissions, we will be looking for commitment letters from the banks that will be providing that debt portion. The ratio of equity to debt, the program requires a minimum of 20% of project costs to be equity supported. So it's an 80% debt, 20% equity project. As discussed just a moment ago, you have DMT sign the partnership agreement, which brings with it the full faith and credit of the Abu Dhabi government. And the consequence of that, obviously, is that there's no separate guarantee along the lines of the DOF guarantees that some of you may have seen on the utilities projects in Abu Dhabi previously, but not required as a product of the government being the primary counterparty under the partnership agreement itself. We can skip on, Sarah. Thank you. Fairly typical, as would be expected, there will be minimum insurance requirements under the partnership agreement. We're still working out what insurances will be private sector procured and which the government will have, but it will be your normal kind of bucket of insurances, sort of construction all risk, delay in startup, third-party liability, that kind of thing. And then there will be mechanisms in the partnership agreement to provide relief for our developer counterparty. Some of those situations that may arise, some of those events that may arise, will allow for relief both from the obligations under the agreement and also the ability to claim increased costs that arise as a consequence of those events. So that category will be the compensation events, and examples of those would be sort of adverse political events and changes in law. And then the other bucket of events will be the force majeure events, which are more sort of similar to the natural force majeure type scenario events that you will have seen in other contracts in this part of the world. And that's where there's a degree of risk sharing in the relief that's provided is relief from obligations and time relief, but no ability to claim increased costs. The car parks at the end of the term of the concession will be expected to be transferred back to DMT, and so the partnership agreement will include a set of handback requirements with minimum residual life, etc., so as to set the standard for what's expected in terms of when those assets are returned. Just very quickly, as I'm sure you would expect, the partnership agreement will be governed by the laws of Abu Dhabi and the federal laws of the UAE, and the expectation is that any disputes under the agreement will go through the ADGM arbitration mechanism. Go on to the next one, please. Thank you. And finally, just to touch on the termination arrangements under the partnership agreement, this will be something that when you're talking to the banks, they'll be particularly interested in looking at. And there's a compensation payment that's linked to termination under the partnership agreement. As a product of what I sort of described earlier on, in the upfront cost of construction is borne by private sector, and because you have then a 20-year payment term, and that payment term is that payment amount is largely compensating for the upfront cost. You need to have, at the point in time, if the agreement was to be terminated early, you would need a compensation payment to be made in order to cover the fact that the upfront cost is borne by the private sector. And so as the asset transfers back to the government, there's a payment effectively in lieu of the fact that or in consideration of the fact that the private sector has incurred all of the upfront costs. And so what you see on the screen here is a fairly typical kind of organization of what that payment amounts to in these kind of projects in this part of the world, and indeed on sort of social and municipal infrastructure projects around the world, where the payment in each case is sized so as to cover the outstanding debt that the lenders still have on their books. So in year 3, there will still be a number of years outstanding in terms of the senior debt that had been procured for the project, and then also a return of the equity invested by the sponsors, by the shareholders, the consortium. And then depending on the scenario, there is either a payment of return on that equity and indeed costs surrounding the termination. And effectively, if you were to work down this list from a sort of a government-driven termination, so a voluntary termination on the part of the government, or a termination that came about as a product of a government default, or indeed a prolonged compensation event, which is effectively those category of risks that as the government we say we take the risk of, there's effectively a full payment to compensate the private sector for its lost opportunity. And then that reduces, in the case of a force majeure event, what's paid back is the investment, but no return on that investment, and the termination and a smaller level of termination costs. But it's recognizing the fact that the force majeure risk is shared between the government and the private sector, as would be the case in any other contracting arrangement. And then in a default scenario where it's a private sector default, then there's a mechanism that's been used sort of worldwide actually on these kind of projects, where you do an analysis through a retendering procedure or a fair value independent valuation of what the project is worth at that point in time that the termination has arisen, and the amount that's paid is linked to that. So it's effectively the value of the assets at the time of termination, taking into account the fact that there's been a default. I think the important point to make here is just to say that in all circumstances, there will be a payment made by the government to the project company, to the private sector, which is different to how it's been on a number of other projects in the region, in particular in the utility space, where there's been an option on whether or not the government would want to buy the asset back or not at the point of termination. What we're saying here, and we think it's something that will really help the banks in particular, is in all circumstances, we will buy the asset back. So there will be a compensation payment made. We can jump on, Sarah, thank you. So just very quickly, we've 2 slides here, and I think you've had the deck, or you will get this deck, that just describe how the risks are allocated between the government and the private sector on this project. I won't go through them all because we will be here for at least another hour, and I'm sure no one wants to listen to my voice for that long. But broadly speaking, the way we approach the risk allocation on this project is to look at the sort of global benchmarks for car parking projects and other municipality infrastructure projects in the sort of project public-private partnership space, and then we've overlaid the kind of local flavour. So the additional protections that investors and banks typically require on these kind of projects in the region. I won't call out any of these specifically, perhaps other than just to mention again, and it's obviously been mentioned a couple of times, but the demand risk point, in that although obviously the needs assessment that Jonathan explained earlier on demonstrates that there is a real need for these assets and that we expect them to be well utilised, it makes no difference to you as the developer how much the car parks are used. The availability payment will be made irrespective of how much the public uses the car parking spaces and pays for the car parking spaces. You just flick on to the next slide, Sarah. I'll just see if there's anything specific in here to pick out. I think I've probably covered most of this in the previous slide, so I'm happy to move on, and a number of these points are called out in the questionnaire that you'll receive to fill in. And with that, I will pass back over to Sarah. I think you're taking us through the tender process, are you?
Yeah, thank you, Elliot. So now I will be walking you through the tender process, which again follows our infrastructure guidebook, which, as mentioned previously, you can find on our website. So we have a 3-stage tendering process. The first stage is the issuance of an expression of interest. And the objective of the EOI is to basically gauge interest in the market and identify a long list of potential bidders for the project. Once this is established, we then move to the second stage, which is the request for qualification stage, where we would effectively seek to kind of shortlist the bidder pool identified from the EOI. So an RFQ will be issued to all parties, and the interested applicants must submit a statement of qualification. And this will be evaluated on a pass-fail approach, where the bidder must meet the minimum eligibility requirements that Jonathan will be explaining to you in detail shortly. Eligible applicants are then pre-qualified to proceed to stage 3, which is the request for proposal stage. So moving on to stage 3, the RFPs will be issued to the pre-qualified applicants with an RFP package, which will include instruction to bidders, project agreements and schedules, technical specifications and requirements, and the bid form sheets. And the RFPs would then go through, again, a robust evaluation criteria where we would assess technical, legal, and commercial capabilities. And once this is complete, we will request the pre-qualified applicants to proceed with the proposal submission for evaluation. And finally, once evaluation is done, the preferred bidder would be selected. And just to conclude, the objective of the tender process is to secure the most competitive offer from bidders with a compliant technical solution. And upon the award of the preferred bidder, we would seek to negotiate and close a deal on the best possible terms. So now I'm just going to hand back to Jonathan, who will explain to you the minimum eligibility requirements.
Thank you. So I think you'll have seen these already. So I'll try and just pick out some key points. And the fundamental principle around going through the RFQ process is to ensure that when we move into the RFP stage, we've actually got bidders or consortium of bidders who are able to deliver the full service requirement and the scope of the project itself. So the minimum eligibility requirements are for us to be able to select the preferred bidder to then for DMT to then enter into an agreement with the project company. As such, we'll break down the eligibility requirements into 3, which starting with legal. So we obviously are looking to find or ensure that the bidding pool have the legal right to enter the bid process and the legal right to enter into the contract as we move forward. So ensuring that your company documentation is provided is essential for us to do that. From a technical perspective, we're looking for trying to ensure the bidding pool first of all has the relevant experience to deliver not only the design and the construction of the project, but also the ongoing operations and maintenance and facilities management of the project. So, we're looking at bidders and companies that have a minimum of 2 years of design and construction experience and worked on 2 projects, and a minimum of 2 projects for operations and maintenance of the facilities. Now, it may well be that as individual companies that you're either on one side, so the construction, or on the other side as the operations and maintenance. And therefore, it's important that as we move forward in the process, that actually as a consortium, you're able to meet those requirements. So if you're not able to do that as a standalone, I encourage you to look to team up for the delivery of the project. The final point on the technical point is we're obviously looking to get this project up and running, get the assets built and get them operational as quickly as possible. So that availability of resources in Abu Dhabi is key. So it's one of the pass-fail requirements. If we just move on. So the final set of eligibility is really around the finance, and it's really around this project for 23 years is a significant investment by both parties, the government and you, the private sector. So ensuring that you've got appropriate minimum net worth as a company, and that you've got experience in project financing is actually key for us to enable that we are working collaboratively in that partnership for the delivery of the project, with both sides of contracting parties being able to deliver on its obligations. So that's really the premise of all three sets of eligibility requirements. It's to ensure that the partner that comes forward to work with the government of Abu Dhabi to deliver this project has the requisite capability and capacity to do so. So I'll pass now back to Sarah, who I think is going to take us through the timeline.
Yeah, thank you, Jonathan. So yeah, now I just want to talk about the project timeline a little bit. So as I mentioned before, the project is currently in the business case stage. It has a targeted EOI launch date in December 2020. Following the EOI, we're targeting launch of the RFQ in January 2021, with the pre-qualification of the bidders taking place in February. The RFP will be launched in March 2021, and bid submission and evaluation will occur between August and September. And finally, the preferred bidder will be awarded the project, negotiations will take place, and commercial close will be achieved by January 2022. In addition to today's market sounding workshop, we are also going to host a number of other investor engagement events, including 2 technical workshops, which will be led by Jonathan Looker at Mott MacDonald. These will be in December and February. So the technical workshops will be specifically designed for EPC and FM contractors and designers who aren't that familiar with PPPs, to kind of help build their technical capacity and know-how by providing detailed technical information usually required in a PPP transaction, such as output specifications and payment mechanisms. And therefore, I urge all interested parties to join this, as it will be a very beneficial workshop for you. And finally, post the RFP launch, we will also host a bidder and technical conference, and that's going to take place in April, May 2021. So this brings us to the end of today's webinar. I just want to thank you all for your time. We hope that this presentation has given you all an overall understanding of the Abu Dhabi Investment Office in general, and specifically the new car parking project. As mentioned many times earlier, we're seeking your feedback in order to make this deal as attractive as possible to the market. So please, I urge you all to participate in the survey that has been shared in the chat, and that we will share again via email. We look forward to receiving your responses at the earliest possible time. And just feel free to contact us in case you have any further inquiries in general or in relation to this project, and we would be more than happy to assist you. Thank you, everyone, and have a good day.
Thank you all. Thank you.